With the March quarter now behind us, it's timely to reflect on the performance of the Trobe Australian Credit Fund across the first quarter of 2023, a period which saw a new level of volatility in markets. The catalyst, of course, being the demise of the Silicon Valley Bank and the subsequent arranged marriage between Credit Suisse and UBS. Market events such as these provide a real-life stress test of portfolios in the investment fundamentals of a manager. So let's unpick the performance of the credit fund across the first quarter of 2023. I'm pleased to report that the credit fund experienced controlled positive growth across the first quarter. The credit fund grew from $8.9 billion at the end of December 2022 to $9.3 billion at the end of March 2023, with assets under management growing month on month. The growth in the credit fund is being matched by a very healthy pipeline of high-quality loan assets, with group lending volumes actually increasing across the March quarter. This allows our fund portfolio management team to be selective in the assets into which our portfolios invest, assets which ultimately drive the ongoing performance of our portfolios. We remain committed to our disciplined credit assessment process, where every loan application is reviewed by at least 2 separate fully trained members of our 200-strong credit team prior to approval. By maintaining these high underwriting standards, the credit fund is in the best position to deliver on its objective of providing low volatility income for investors. Our conservative approach to the construction and management of those portfolios persisted throughout the quarter, highlighted by the credit fund's weighted average loan-to-value ratio declining to 64.3% from 64.8% in December 2022. These deliberately conservative settings provided significant downside protection for investors in our portfolio accounts, which is of course particularly important during periods of property price depreciation, which we saw across 2022. Those portfolios, which have been built with great discipline over time, remain highly diversified. Our $9.3 billion credit fund is comprised of 12,084 loans with an average loan amount of about $700,000, ensuring that the performance of any one loan doesn't itself affect the investment outcome for investors. Geographically, our assets follow the population, ensuring they remain within the broadest and deepest markets. Our asset bias sits towards the stability of the residential asset class, with targeted exposures into commercial, light industrial, rural, vacant land and development finance. We are, as always, keeping a watchful eye on the market, and during the March quarter we had a banking sector which suffered a mini crisis. In response, we conservatively tilted our classic notice account into an overweight cash position, closing March with 39% cash holdings, up from about 12% in February. With the mini crisis now appearing to be behind us, we have taken steps to carefully reinvest that cash back into mortgage assets. As to the health of our loan portfolios, the Trobe financial borrowers continue to perform incredibly well. Arrears fell throughout the back of 2022, concluding the calendar year at or near their lowest recorded observations. Arrears normalised as expected throughout the March quarter, now sitting at the bottom end of our historical average ranges at just 2.9%. These benign arrears levels are a reflection of the high quality borrowers we target and the strength of our deep dive credit assessments. To summarise, the conclusion of the March quarter saw the credit fund continue its long track record of highly resilient portfolios delivering regular low volatility income for investors. Performance which has ensured that no investor in any of our portfolio accounts has ever suffered a loss of investor capital. Performance which is recognised through the continued support of our investors, support which we never ever take for granted. If you have any queries from this update or would like to discuss your investment options with us, please call our friendly asset management team on 1800 818 818, and please also subscribe to our YouTube channel to ensure you receive our investor updates. Thank you.